now to discuss our top 10 predictions is IHS Chief Economist Nariman Behravesh. Nariman, great to have you.
Thank you, Laurie.
So your first prediction is for GDP. U.S. recovery will start slowly, and you're calling for GDP to be stuck in a 2 to 2.5% range for much of 2010. So let me ask you, if today's economic news, better than expected industrial production rising 0.8% is consistent or perhaps a little bit better than your forecast for how that will play into your GDP forecast?
Well, today's industrial production numbers, as you know, came on the heels of a very weak month in October. So if you balance those two out, sort of average them, if you will, very much consistent with our view. So you'll get these monthly numbers bouncing around quite a bit, but it's pretty much on track. Just about all the data we're seeing very much on track with this modest recovery. It's a recovery, but as you said, in that sort of 2.5% range.
And what are the, what's the give and take there? What's the tug of war? What are the aspects, the macro fundamentals?
Right. Speaking of airline analogies and airplane analogies, the tailwinds are, of course, all this policy stimulus. Interest rates close to zero, a lot of fiscal stimulus. The headwinds are rising unemployment, and we think it'll actually go up a little bit more before it eventually starts to come down, and deleveraging by households. So you've got the push-pull, as you're saying, the tailwinds and the headwinds, to use the Dreamliner analogy, if you will.
I appreciate you tying in with one of our other top stories today. What you think is going to make eyebrows raise the most of your, the top 10 predictions for 2010? What will be most surprising to folks?
I think it's the inflation story. We really don't think inflation's a problem, even though the producer price numbers were a little higher than expected today. That was a fluke. We think inflation is going to be very tame for the next couple of years. I think a lot of people are worried about it. I would say don't worry about it. When you got this much slack in the economy, unemployment rates 10%, you're just not going to get inflation. So yeah, I think that's probably the one that gets the biggest sort of reaction.
They said the PPI was driven by a big jump in gas prices, in fact, so that's probably why it's not so much of a concern. Hey, I'm curious, as we await the Fed's decision on rates tomorrow, there's been some talk that the Fed might actually raise rates before unemployment really makes a break lower. What do you think about that?
I doubt that very much.
Really?
They're much more concerned about the fragility of this recovery, about continuing sort of aftershocks of the financial crisis, let's say commercial real estate problems, so on. Much more worried about those things than they are worried about inflation. I mean, inflation just isn't a problem. Yes, the commodity prices have gone up a little bit, but if you look at overall inflation, core inflation, it's not going anywhere.
And I do want to ask you quickly about the hard W. So what is the difference between, a V and a hard W that you're predicting still uncomfortably high?
The hard W is basically the second dip, a double dip, which could be triggered by any number of things. Consumers pull back more, another leg of the financial crisis, oil prices shoot up because of a supply disruption over 100. Any one of these could trigger a hard W.
Nariman Behravesh, Chief Economist at IHS Global Insight, with his economic predictions for the new year. Thank you so much.